Hello, welcome you back to YouTube channel of Dipesh Patni Education Academy. See here, in this today's video, I am going to show you one of the most important thing, how to analyze the equilibrium in the market. Okay, what exactly the equilibrium in the market? Take whatever the market you can, but every market should be equalized before it move in its forward direction. Okay, see here, wherever you take, market has to be balanced. If there is an imbalance, then there should be a correction in the market. Okay, see here, this is the gold chart. So what we can see is that whenever you see a long momentum in the market, see here, we have a very huge momentum, right? But here the momentum is not yet reached to the 50% level. So this is the reason where the imbalance occurred in the market. Okay, see, whatever you take, everything should be balanced in the market. Okay, see, for an example, see here, from here to here. Okay, if you draw a premium and discount sum from this low to this high, then we can accept a equilibrium zone at the 0.5%. Okay, see, this is equilibrium, right? So whenever the price touches for the equilibrium and reaches the next high and breaches the next high, then we can say that it is a valid break of structure. So most of the smart money concept traders, they are mapping the wrong market structure. So it is, I have seen a lot of my students, they have been marking a wrong market structure. See, if you want to mark the real valid break of structure, then it has to be balanced in the market. How it has to be balanced? First, you need to click on the Fibonacci tool. Fibonacci tool is one of the most key tool, okay, to analyze where the possible reversal is coming in the market. Okay, see, 50% zone is one of the possible reversal. So whenever the price reaches for the 50%, okay, to balance the imbalance in the market, then you can say that the sellers and the buyers are saturated. Once again, I'm telling, buyers and the sellers are saturated in that point of zone. See, this is the point of zone. As soon as the sellers and buyers are matched, again we got a huge momentum in the market. Okay, for an example, see here, from this low to the this high, here again the price reaches to the 50% level. And what happened? As soon as the price reversed, take example wherever you want. Okay, every time whenever the price reaches for the 50% zone, we can accept a huge momentum in the market. See here, we have one more, this is the low, this is the high. See here, the price reaches to the 50% zone, so we can accept a huge momentum in the market, right? See, one thing I want to clear you is that, so what exactly the equilibrium? Let's understand in a very easy way, in a very deep way. Okay, see, this is the market structure. Okay, this is the market structure. So what happens? This is the breakout structure. Yes, this is the breakout structure. Okay, so here many traders, they consider this as a breakout structure, right? But this is not a breakout structure. This is just a liquidity graph. Okay, this is just a liquidity graph. So where exactly the valid breakout structure lies? Valid breakout structure lies here. So where exactly you need to look for a demand zone while buying? So you need to look a demand zone in this entire leg. Okay, so most of the traders, they try to look a valid demand zone in this particular leg. No, this is false. You should this is completely not a right form of analyzing the market. There is a proper way to analyze the market structure. So here what you need to do is that you need to take a fib level. Okay, then you need to draw from this low to this high. So now tell me, the price tapped into the 50% zone? No, right? So what we can accept is that the price might take out this liquidity in the future. Okay, so the future might be today, tomorrow, day after tomorrow, or in the next month, or in the next year, we don't know. So this liquidity is pending. So this liquidity should be saturated. So how it is going to be equilibrium, right? So here in this momentum, if you put the psychology here, the trading is all about the psychology, right? Here the buyers are ruling the market in this particular market structure. For an example, consider this as a 15 minutes time frame. Now if these buyers wants to move the market in their direction, then someone has to sell them, right? So where exactly the manipulation is going to happen? Okay, at this 50% zone. This 50% zone is the zone where the accurate equilibrium zone is going to happen, right? See here, if we drag this till here, now here this x lies under our discount zone, right? This x in the sense liquidity, this liquidity lies under our discount zone. So what happens? So whenever the price taps to this level, then we can accept for buying. So you heard that there is a correction in the market. So what exactly the correction? So this is the correction in the market, right? So here the structure got breached, okay, and here the price tapped into the discount zone, and moreover the price took out the liquidity. So this is the correction. The correction might be like 5%, 6%, 10%. In the recently, there is a correction in the gold in the similar way. Okay, I'm going to show you. See, this is the how you need to capture a big momentum in the market. So if you want to build a positional order, then where exactly you want to build, you can build in this discount zone. Okay. So this is how a proper correction happens in every market. Okay. So if you don't know the how to map the proper market structure, then completely it is going to be a disaster for you, because it's all about the market structure, what I feel. Because from my experience, market is all about FC. Everyone's have their own point of view towards the market, right? So my point of view is that every time the market should be saturated before it wants to go in its direction. Okay, so there is plenty of examples, even it is occurring since history, present, and in the future also it is going to happen. Same thing, everything repeats same in the market. I'm going to show you some more examples. Okay, see here, wherever you take, you will get a very good zones. See here, this is the zone, this is the demand zone where I am looking to buy. I already marked here and I have placed my risk to reward ratio 1:2. Okay, here why I am particularly looking at this point of zone to buy. Okay, many retailers might be looking to buy at somewhere at here, okay, somewhere at here, right? So here, this is the correction in the gold. So what is the correction? See, the correction is 2.32%. Okay, this correction, how to identify this correction? See, it's very simple. Take a fib, draw from the lower low. See here, we have an imbalance, right? See here, the price, did the price tap into the 50% zone here? No, right? So what happens? We need to drag this to the next high. Again, the price didn't tap to the 50% zone, and again drag it. See, when you dragged it till to the extent, then you can accept a 50% zone. So what happens in this scenario? You have to wait for the market correction, and as soon as you get a market correction, you can build your position in this discount zone. See here, exactly we had a support zone here, and the price, see how the buyers are building their position. Understand the psychology. See, there is a huge selling in the market, and buyers are building their small position. If one thing you need to understand in this scenario, if there is a huge selling coming from this point of zone, and later the market not able to breach this support zone, right? And after that, the price wasted its time on the support zone, and slowly the buyers are building their position. See here, very huge candle, very huge green candle, and later again red candle, again huge green candle, again red candle, very small, again very huge green candle, again there is less red candle. See, this is how the big players are building their position. Okay, so you need to understand that. So if they want to build their position, what they need a liquidity, right? See, if I want to, see, for an example, I have a 1,000 crores, 10,000 crores. Okay, if I want to buy something, someone has to sell for me, right? So if there is no orders are pending in the market, then where exactly I'm going to buy, right? This is the reason why I am just I am dividing my 1,000 crores into a small parts of money, like 100 crores, 10,000, 100 crores, 200 crores, 300 crores. Then I am just placing my order like this. This is how I am building my position in my entire margin. See here, and here, why there is a huge momentum again? Here, my orders matched with a huge movement, with a huge sellers. I got a sellers here. Why I got a sellers here? See here, it's very simple example. See, this is the resistance. Okay, what happens in the resistance? The sellers are trying to sell their orders from this resistance zone. So I am a buyer, I got a sellers here, right? So these all the sellers, those who are trying to sell from this resistance zone, all got trapped. Got it? See, these are all the simple logic examples you need to understand in the market. Okay, so exactly where you need to sell, where you need to buy. Okay, everything is explained in the smart money concept of Dipesh Patni Education Academy program. Okay, so if you want to deep dive into what is exactly the liquidity, how the big players are building their positions with the help of the technical analysis, and what is demand, what is supply zone, and how to capture a big momentum in the market, everything I'm going to show you. And I'm not just showing you, I'm going to trade live with you. Okay, so in the industry there are only a few traders, those who are going to trade live with you, right? So we are the one who are going to trade live with you in the forex as well as in the crypto. Okay, see, if you identify, see, if you think that the fundamental is going to define your direction, of course it is going to define your direction. Up to till what extent? If the fundamental is good, so for an example, if the fundamental is good, so you need a price to buy, right? You need an exact price where you need to enter the market. So if you don't know the exact price where you need to enter and where you need to exit the market, then there is no point of going through the fundamental analysis. So fundamental analysis plays a very crucial role in identifying the direction, and also technical analysis help you to enter where exactly you need to enter with the help of the fundamental analysis. Got it? See, this is how the simple thing, and why I'm looking to buy from here. Okay, okay, now let's saturate the market. Okay, see here, I took my fave. See here, did my price tapped into my discount zone here at my 50%? No, right? So what I'm going to do is that I'm going to drag it. Again, no, it didn't tap. Again, no. And again here, see here, at the point of 50% zone, I have find out a valid demand zone. Okay, this is the valid demand zone. So why I'm looking to buy from this particular zone? Let's understand the psychology. This is the support zone below above to my demand zone here. So see here, the very simple thing, a lot of retailers, smart money traders are going to confuse here. This is the support zone. So what happens on the support zone? It is the signal for the buying. Okay, a lot of retailers are going to build their position on this support zone. Okay, there are n number of retail traders, not only the retail traders, there are boutique firms, those who are building their position on the support zone. And if you are a smart trader, you know that there is a demand zone below this support zone and it is going to breach, right? It is going to breach. Why it is going to breach? Because see here, the momentum, the footprints of the big players are identified in this particular zone. At the same time, we have a 50% level. So this is the perfect zone where we can look for buying a gold for a 1:2 risk to reward ratio. Okay, so this is how you need to identify the zones on the market with the help of the psychological levels. Psychological levels, like, see what exactly the psychological level. See, this is the resistance zone. So why this is the support zone? Why I put this zone? Because I am seeing this, there is a price took a multiple reversal from this zone. So this is a psychological level. I didn't calculated any numbers to draw this zone, right? So this is the psychological level. So this is the psychological demand zone. Why it is a psychological demand zone? I didn't calculated anything to find this demand zone, right? See, this is just based on my experience where I know where exactly the price is going to reverse, right? So this zone might fail, I am not sure. Because why? Because it's all about the probability game, right? The trading is all about the zero sum game. If someone is losing, someone is gaining, right? So these, if this zone fails, still we are bullish in the market. Okay, there are plenty of reasons why there is a bullish thing in the market. Okay, see, this is how you need to do a smart analysis in the market. Okay, so if you want to deep dive into this smart money concept, then enroll with us. Then I will get back to you in the classes. Okay, thank you.